This is always going to be a dicey time for Bitcoin and cryptocurrencies as we see a lot of retail starting to re-enter the market, potentially after forgetting about crypto and Bitcoin while the market has been down over the last 18 months. We're seeing a lot of dormant YouTube accounts coming back to the space, telling us that the bull market is back on. So pay particular attention to these specific times in the market as the timing is lining up for at least a pause, essentially what we're seeing in the markets. You know, we've been covering this over the last several months and closer to the market over the last few days, just looking at the possibility that maybe we'll see a bit of a pause in these markets in Bitcoin and crypto before we get that next big run in 2024. So I've got this to update with you today and huge things happening in the US stock market. As we've been following, you guys know for the last couple of years at least here that we're looking at this being the next stage for the stock markets, traditional finance, and real estate. So we've got the stock markets to get through today as they are flying, getting very close to their July tops. And in the case of the NASDAQ, nearly back at its all-time high price. So we're within a few percent of that all-time high when the masses on this correction were thinking the market was going to collapse. So join us here, like and subscribe. This is your home of macro cycle analysis. This is how we come to understand where these turning points are in the market, or at least the general trend when the masses are essentially doing the opposite. It is Black Friday next week, so that means it's our biggest sale of the year. Click that link in the top of the video description, name, email address, stay tuned to your inbox. More details coming up about that massive sale very, very soon. Let's kick it off with the CPI data. CPI month over month, CPI year over year for the US. Data has come out. People are going to be telling us the market's boomed because of this. Yes, in the short term, 24 hours, great. The SP 500 has gone bananas. About 2% happened yesterday on that market. But you know, we've been following this and looking for the low. And I said many, many times that this was likely to be the low forming in the market. We are even above the August lows, which were significant at the time as we had that rally and then the collapse. Now, I'm going to blend this together with Bitcoin and crypto as well, because for our cycle, for our macro cycle, we want to see the S&P 500 hit a new all-time high, as that is another indicator that Bitcoin is on its way to another new all-time high. You may have seen me post about this before and go into greater detail here on the channel. If you haven't, it's going to continue following on with our macro series, so make sure you do subscribe to the channel. Anyway, back to the CPI. CPI came in lower than the forecast and the previous, so previous 3.7, forecast 3.3. And it's coming in lower. So look, regardless of what everyone thinks about the info and how it's put together by the government, this is the reading. So we have to work off this. I'm going to put the other stuff aside because you don't want to get too many different ideas going on, because that just ruins your own fundamental analysis. This is the data. Markets are going nuts, but of course, that's the trend of the market. The overall cycle is still up. I need to come back to this because it's a very, very long cycle. It's basically 14 years up, 4 years down. Roughly speaking, the peaks are around these years. Could be 2027 for the stock market. We'll continue to wait. There's still time in the game. But the collapse will happen after that. We're in the midst of this next stage. This is the winner's curse stage right here. When the market goes faster, you can see the range, the movement up here, and then it starts to increase a little faster. I'll update this. I've got a new sheet coming out very, very soon, a new infographic to make it nice and clear. But essentially, this is where we are at. We're moving into this fast-paced mania with extreme volatility. You're going to see some big ups and big downs. Everyone's going to get confused. That's just the way the markets work. Looking also at the cycle analysis that we've been covering for the second half of the year, you can see June, July down the bottom here. Here is your July marker. There is your July top. The green line is what's happened this year, and we'll be able to fill this in soon with a huge move to the upside. And I have to admit, that is faster than I had expected. You know what I was saying earlier on, just looking for the market to overcome these resistance levels, and it has done so in a magnificent fashion here. Over the last few days, taking out 4,400, so those swing tops of mid-October, getting very close now to the tops of early to mid-September as well for the SP 500. As for the NASDAQ, it has cleaned out these tops just in the last day. We're seeing tech stocks also pump. Obviously, this is the NASDAQ, so the tech stocks are also going up quite significantly. Plus, we're seeing the US dollar collapse. So if you are following along, you know that this was part of the macro 50% failure. We got a big failure in early October, and then another big failure in November. The date specifically, 3rd of October, 1st of November, almost a very clean 30 days. So a nice movement there. And then the collapse here, breaking past 105. So the next target is 103 for the US dollar. You might be wondering, how is this all working in? This is part of the cycle. So if I can find my chart here, the real estate cycle heading up. We're in our second half. Here's your 7 years. Typically in the second half, we see the US dollar start to come down. It's a macro cycle, takes time, but you'll see it crumble over this second half of the cycle. Collapse happens, people rush to the US dollar, years away, US dollar will have its turn again and potentially go up. But for now, this is what we've been looking at all the way through the move up and down. Receipts are on the channel if you want to go back and view them. But if you're just following along now and you're joining us here on the journey, this is what we're anticipating for the second half of the real estate cycles, for the US dollar to continue coming down, not because of BRICS or anything else like that. It's just the way the cycle plays out. Okay, so that's the US dollar, target 103. That breaks, then we're most likely going to come back and test the weak half of the 50% level here. So you can see the 50% from 107 down to 99, halfway through the bottom half here. This is the weak half down the bottom. That's going to help out Bitcoin, cryptos, stock markets, real estate. It's going to help out all the assets because the US dollar is dropping. So as part of the cyclical nature of the stock market, we were anticipating that the second half of the quarter four was going to have a rise. And I thought that would happen later in November, December. Well, we're getting it early on in November instead. So we'll just have to be a little bit cautious of the rest of quarter four. If this move keeps going rather quickly, then we'll have to wait and see whether we do get a bit of a pause, which will take some time to digest the move to the upside, which has been very, very extreme for the last couple of weeks. And maybe we start to work our way higher again for December. This was also part of the October movement leading into November, which is where we currently are in mid-November. October down into these days here into the end of October, and then a move out 27, 30, etc. of October. You can see most of these lines are heading straight up, and those lines are all of your US stock markets in all different types of cycles, where it's the pre-election year, which is what we're currently in, which typically sees the market go up. That was something we were talking about in 2022, long before it was headlines, so that we can get into these markets earlier, or at least understand how these cycles are working to better position ourselves in front of the masses. All right, so that's where we currently sit there. And this is basically moving into the S&P 500 for the last lot of trading days here. So the S&P 500 extends its daily winning streak 8 days, up 6.4%. And now this is even further because this was on the 9th and we're on the 15th now. You can see that when the S&P 500 is up, typically the market continues to go up, ends at the 8th day, ends at the 9th day. So where does that leave us now? The trading days, we are at the 12th trading day, just starting the 13th in the next 12 or so hours. The 12th trading day is also up as well. So as we go on these big moves, we will have to digest this, and we will have to come back and test some levels, wait and see where this top comes in, starts to form, and then we can start to revisit where these levels to the downside are. But like I said earlier, this is what we want to see for Bitcoin and cryptos for this next stage of the cycle. If the narrative and the information or the energy starts to shift towards stocks and all the attention moves there, then you're probably not going to see as much on Bitcoin and cryptos, which potentially is what is happening at the moment while the stock market is getting the attention. So are we seeing a lot of that FOMO come out of the market, buyers getting liquidated, or at least the longs getting heavily liquidated here? 300 million. It's one of the, well, it is the biggest in the last 3 months, the biggest longs liquidated from BTC. So far, we've seen 127 million Bitcoin, 65 million on ETH, and the rest of it makes up the others. But essentially, a lot of longs getting liquidated here from Bitcoin, as we just had a push down to take out some of the steam in the market. So we're looking at this, just the possibility. Is it still too early? We have to wait and see, of course. We've got a short-term top in the market on the 9th of November. For the bulls want to see this thing break back above and hold above the 38 level on its way to 42. So I'd love to see 42 hit as a bull. But if this is the hold up here and we just start to churn around, then the lowest prices we want to see Bitcoin go are the previous tops. So we don't want to see it go below these tops here as a bull. It has all that room to move. It is quite volatile. And also stay tuned to what the masses are saying at the moment. The main thing I'm hearing here now, after 2 months up, 2 months to the upside here, are a lot of people talking about now's the time to buy that dip. You're all waiting for that correction, buy that dip. This was the same thing that we heard back over here. We had the dip because the market was just racing to new fresh highs. We had the dip and everyone was saying, now's your turn to buy the dip. You're all waiting on it, buy the dip. And these dips lasted a lot longer than many were anticipating. In this case here, through April and May, it was about a 2-month dipping period. Then the same thing happened again. It raced up, we had another top, then we had a 2-month dipping period. Look at the top here to the September bottom, dead on 2 months. April to June, I think it was almost dead on 2 months again. Look at that, 62 days, dead on 2 months yet again. So is this going to be another 2 months? Let's wait and see. We've already been up for an exact 2-month period again. Remember, this is something that we've also been looking at on the channel. Just looking at those 30, 60, 90-day type of cycles is, for whatever reason, Bitcoin loves to turn on those monthly turning points. 30, 60, 90 days, keep that in mind. We're up 60 days now. There is a possibility of another 30 days, but just focus on where we currently sit and what the trend is doing, whether it's starting to break down or whether we're starting to head higher. Because on the total 3, we've also had a very strong move to the upside. All we're trying to say here is that some of these moves need time to digest. And if in fact it is a short-term turning point, a short-term top, then the move to the downside, or at least the correction, the digestion, takes time. Digestion takes time after such a big meal. That meal has been very, very significant. Maybe we have time for a little bit of dessert here, but I think overall the move has been so big that we will need to have some time to digest the rest of the meal. I love my food analogies. I'm hitting the nail on the head with those ones. So what else are we seeing? The Home Builders ETF. They're telling us that the property market is supposed to collapse. Well, doesn't seem that way. Home builders are making profits. Markets are going up, coming back to fresh highs. This is all good news for Bitcoin and cryptocurrencies. Although it seems short term, the markets are going to fall out of bed, collapse, it's over, that sort of thing. Well, at least potentially. The longer term is all still looking quite healthy, especially when you look at it from a macro perspective. So what we've covered today are the cyclical nature of the stock markets. So we've got the SP 500 up roughly 10%. It is also roughly 2 to 3% from that fresh July high. And from its all-time high, we are now sitting about 6% from a new all-time high. For the NASDAQ, which is another one we've covered today, looking at how these bottoms have come into the market based on our cyclical analysis, we're now roughly about 5% from a new all-time high. Is it going to happen tomorrow? Of course not. But in this case, with that sort of stretch, who knows, right? But these markets are getting very close to new, fresh, all-time highs again, which is a great sign for Bitcoin in the macro sense, but it needs to digest a 12-month move overall and a 2-month in the short term here from September to November. This is your 12-month move from the FTX collapse and the all-time high, 52 weeks to the downside. If you want it to the exact low, that is 54 weeks. So the FTX collapse happened there. Market just touched the bottom slightly lower and then up for 52 weeks from that point, or we take it from the exact low, 50 weeks. So we're getting very, very close to that balancing of time. That is something to pay particular attention to as we've hit into those anniversary dates. So should we worry? Longer term, I don't think so. I think there are some great opportunities coming up as that's what I've talked about in these particular videos. And it's not just enough, I think, when I do my analysis, just to hear someone say that. I like to dive deep into the data and the education so that I can get a better grasp on the theory itself and put it to the test for myself. And if you want to learn more about that, how to do that with your own trading, we've got the Black Friday sale coming up next week. Link in the top of the video description, name, email address. Just wait, watch your inbox for when that comes out over the next several days. All right, guys, that's a wrap for today. Huge gains on the US stock markets. Bitcoin holding out here, 35,500. There's not too much to be concerned about unless we started to see a breakdown and closes below $31,000. And for the altcoin market, it may in fact just be coming up to test these levels and hold out and just give us a bit of time to digest the move. I'm going to do an update on the Wyckoff schematic here as we look like we're basically in that phase D, pushing out and potentially going to hold out at these levels. So stay tuned to the channel. I'll get that one updated and out to you as soon as possible. Thanks once again. See you over on Twitter or at the next video. Check out the videos popping up here. Until next time, take care and peace out.